Hi, it's Nero here from Investment Rise, and today I want to talk about a massive mistake I'm seeing many first-time investors being tempted into making. And if you stay until the end, I'll show you how to not just avoid this mistake, but what to do instead. Okay, so recently I was scrolling through my social media and I saw this ad come up from, I guess, someone who talks about helping other property investors. And what the ad was he showed an article claiming that apartment prices are now rising. And then he went on to say that now is the best time to buy an apartment. He showed some examples of beautiful pictures of what looked like off the plan apartments. And then he said to contact him for more information. So what I want to do here is I want to actually go through that article that he used as his evidence. Then I want to give you some data about exactly what's happening in the apartment market, what to avoid and what to do instead. So let's get to the article he used as his evidence first. Okay, and it was from the Australian Financial Review. And what it says was, apartment prices outpace houses in premium suburbs. Price gains for apartments are beating those for houses in a growing number of suburbs around the country, as worsening affordability and a lack of stock push buyers back into high-rise living. Analysis by CoreLogic found that in more than 190 suburbs around the country, apartments have exceeded house price growth, with the most affluent areas posting the sharpest gains. Overall, however, detached housing prices have outperformed the unit market for well over a year. In East Melbourne, unit prices jumped by 14.4% in the past 12 months, compared with a drop of 8.6% in house prices, data from CoreLogic shows. The gap between house and apartment prices currently sits at $1,627,077 or 33%. Okay, so when you look at that article superficially, it does suggest that maybe now is a good time to buy an apartment if you're an investor. I mean, yes, we know that house prices are high in almost all capital cities, and so maybe you should look at apartments. But here's the problem with that. Think about why is it that we as investors would look at an apartment. Number one, house prices have risen. We can't afford a house in a particular suburb, so let's buy an apartment in that suburb. Number one. And I'll come back to the drawbacks of applying that investing philosophy. Number two, we think that apartments will give us a better yield, a better rental return, so that we're not going to be out of pocket each and every month. Yet if you look through the data, and over the last 11 years that I've been helping so many clients around the country, I know many of them, when they come to me, they'll say, look, Nero, we tried to do this on our own. We bought an apartment. It looked nice. The suburb was good, but we've either experienced very little growth, or we got the apartment and it looked like it was going to be positive cash flow. But the problem is that the strata costs have increased far more than the rents have. In fact, rents have actually dropped in some of these apartments that some of our clients bought before they came in and met us. And so that positive cash flow has gone negative, and some of them can't even sell their apartments to get out of it, right? So chasing positive cash flow and thinking that apartments are a better bet is a fallacy, and it is prone to lots of risks, okay? But the third reason that people then go and look for an apartment is they go, well, I can't afford a house, so I'll buy an apartment in that particular suburb, and then when it rises in value, I will then be able to maybe sell that apartment, make a capital gain, and then buy a house, okay? Now, just think about that for a moment. Let's break it down to the numbers. Let's just say we're looking at a particular suburb where, say, the median house price is $1 million, okay, which I know is less than what the median price is in Sydney right now, but let's stick with that for $1 million. But let's just say an apartment is, say, $700,000 in that particular suburb, okay? Now, let's say that both suburbs, or rather both the unit and the house, increase by 10% in that particular suburb, okay? So the house goes from $1 million at 10% goes to $1.1 million, okay? Now, the apartment also rises by 10%, so it goes from $700,000 to $770,000. But what's happened? Well, when you first started, the gap between the apartment and the house was $300,000, right? House was $1 million, unit was $700,000. Now they've both risen in value by 10%. So now the house, as I said, is worth 1.1 and the unit is worth $770,000. But what's the gap? Well, 1.1 million less $770,000 is $330,000. So in this example, even though you've bought an apartment that's risen in value by the same amount as the house has, you're actually further behind. You're never going to achieve that goal. All right. And if we look at the data, if the one thing that COVID has shown us, it shows us that as Australians, we prefer houses. I mean, let's look at the data from CoreLogic. What you can see from the data is that in Sydney, Melbourne, Brisbane, even including the Gold Coast, Adelaide, Perth, in none of our biggest cities have house prices grown by less than apartment prices. Okay, house prices have continued to outperform units. So look, in Sydney, we have annual growth of 19.33% according to CoreLogic to the 30th of June 2021. But unit prices have only risen 5.1%. In Melbourne, house prices have only risen 8.89%, units 4.73%. Brisbane, 16.13% growth in houses, units less than 10%. Okay? Adelaide, again, 15% growth in houses, only 5.6% in units. And even Perth, which has hit 10% according to CoreLogic, in house prices, the units have still only risen by 8%. So what does that tell you? Well, what that tells you is that if you're going to look at units, you're already setting yourself up at a disadvantage. Okay? And yet so many people are jumping into apartments right now. We know that there are more investors entering into the market because they've seen the price growth and they want to take advantage of that, which makes a lot of sense. But the fact is that many of them are then jumping into a shiny new apartment based on a nice brochure. I mean, I was just hearing from a broker a couple of days ago, and he gets a kickback from promoting off the plan units to his customers. Anyway, we'll just move on. And so what he said was he sent out an email to his apparently quite large database, and he got like nearly 100 inquiries on this particular off the plan unit complex. Now I won't tell you where it is, but what I will say is it's in one of the most oversupplied markets in all of Australia. But because the brochure looks nice, because it's by the water and it's got a lovely pool in there, and it looks very, very nice, people are jumping in. Okay, and the thing is, this unit complex won't be built for something like 3 years. So they're going to lock in a contract right now and then have to wait for 3 years and then hope that in 3 years' time, the bank will value their unit at the price they paid for it or higher. Otherwise, they're going to be in a lot of trouble. And I've spoken at length about in past episodes how we saw this in Sydney between 2017 to 2019, where people who bought off the plan units, when it came time to complete, when it came time to settle and get the loan all approved, the bank said, no, we don't think the apartment price that you locked in 3-4 years ago is valid anymore. We think it has dropped in value, so we're not going to give you the full loan. And so many people had to walk away from their 10% deposits. I'm seeing that happening again, and I expect we're going to hear these stories. You won't hear these stories now. You'll hear these stories in 3-4 years' time when people come to settle on these shiny new apartments and they can't. Okay? So, look, if you're looking for apartments though, that doesn't mean that they don't all rise in value. Some markets do. The key question to ask yourself is this: what is the likelihood that they can build more towers? Okay. Now, in suburbs like East Melbourne or the North Shore of rather the northern beaches of Sydney, look, there is almost very little possibility for new towers in those key suburbs. So hence those prices are rising. Like in the northern beaches, unit prices are now well over $1 million. Okay, and rising because there's no more land over there. So that makes sense. But if you're buying, into off the plan units and buying into apartment complexes where they are building more towers and there are more towers slated to come in the future, you've got to ask yourself, what's the potential for capital growth when they're continually increasing supply? Okay, what's the potential to get good rents when tenants can choose, whichever department they want? All right, so you need to be careful. Yes, I do expect apartment prices will rise, yes, in the short term, and that will tempt many people to jump into apartments right now, yes, and they'll see some growth. But then what's going to happen? Developers will see profit margins. They'll be able to jump in. They'll be able to build more towers, increasing supply, and your capital growth will be compromised. Okay, and as I said, we know for a fact that house prices have always outperformed unit prices, and there are still some suburbs in Sydney where, as of 2021, when we're in the midst of probably the biggest boom we've ever had, and it is set to continue across many of our capital cities and good regional towns, the fact of the matter is this: there are many who have bought apartments, say in 2017 or 2015, who still today can't sell the apartment for what they got, and even if they can, there's no equity for them to release if they want to get a bank valuation to then buy other properties. So imagine buying an apartment in a suburb where house prices are rising, but apartment prices are not keeping up, and that's the case in most of our capital cities. You'll be actually left further behind. All right, and so the whole, I guess, theory that, if you can't afford a house in a good suburb, go buy a unit there and you'll be fine, is just wrong. Okay, you will be left further behind. As I said in my earlier example, even if unit prices rise at the same rate as houses, you're still going to be left further behind if you're thinking about getting a house. Okay, and the odds are that that's not going to happen. The odds are, based on the data, unit prices will not grow as much as house prices in a suburb. And so therefore, if you're thinking, I want to get maximum capital growth, or I can't afford a house here, don't go and buy a unit there unless you're thinking about one of the more expensive premium suburbs of say, Sydney or Melbourne. Instead, do your research and stick to houses, but start exploring other opportunities. Right now, there are so many areas where house prices are rising that could probably fit your budget, and the best part is you can get the rents to cover the mortgage in these suburbs, so you're not out of pocket each and every month. So when you've got those sorts of opportunities available, why would you want to take a shortcut? Why would you want to be, I guess, dare I say it, lazy, and make an investing decision of a shiny brochure? Instead, make your investing decisions off numbers. Reach out if you need some help to find out what the best areas are to invest in, and if you want some help finding those properties. But definitely do your research and stick to houses. I really believe that that's going to continue that trend of house price growth outperforming apartment price growth, because think about it, they're not making any more land, and there are shortages of land in so many areas around Australia. And wherever there is a land shortage, all other things being equal, and if demand is continuing to outstrip supply, you can expect prices to continue to rise. So if I wasn't strong enough in my message, please avoid those off-the-plan units, okay? If you're looking to invest for capital growth and good rental returns, stick to buying things where supply is limited, demand is more than supply, and that really is going to mean either you're going to be buying apartments in premium locations and you can afford, well over $1 million, or go back and look at houses outside of maybe the two most expensive markets of Sydney and Melbourne. There are many opportunities out there, and I really think that that's the way to go for almost all investors going forwards.
Hey, thanks so much for watching. If you found this video valuable and you're thinking you might like my help to help you find an investment property, then head on over to nerocall.com to discover our unique 5-step process that's helped my private client group purchase now well over $66.2 million worth of property. And then if you like what you see, you can book in for a half-hour phone consult with me personally. Either way, thanks again for watching.